Cameron Brand joins us, Director of Research with EPFR. Cameron, good morning. Thank you for joining us. I'm not able to put the puzzle together, Cameron. The financial markets I have read is dollar goes up, money moves to US. Dollar goes down, money comes back to emerging markets. Yields they go up, money moves out of emerging markets. Yields they go down, money moves back to emerging market. Guess what? Dollar is down and yields have started correcting. Where are the flows?
Well, I think the short answer is that the pretty solid case for a number of emerging markets, and I'd certainly include India in that, is simply drowned out by the sort of rather frenetic energy and scramble to get a fix on the Trump administration's economic policies. And even though tariffs have been getting most of the attention, they've been pretty busy in a number of other areas. So this is a slightly odd moment when even though the pieces, as you've laid them out, fit together, pointing to one direction, I think people are sort of very much on hold right now. Flows this week, by and large, have been fairly lackluster to most fund groups, except those that are strongly tabbed to benefit from the policies that are expected from the Trump administration. So, my sense is not to read too much into the current environment. It's unusually frenetic. I think Trump has learned from his first term that he needs to hit the ground running before opposition solidifies. And that's what he and his administration seem to be doing. And they're doing it in a way which obviously raises as many questions and answers on a day-to-day basis. So I think there is just generally a feeling that the best strategy is to put money in U.S. assets and wait to see how things play out.
Good morning to you, Cameron. This is Cheryl also joining in the conversation. Just wanted to get your views, given the fact that when we're talking about flows, we've seen continued selling pressure, especially when you talk about FIIs back home. I wanted to understand, is this entirely about India versus China, or are you of the view that this is actually US versus EM sort of a battle? That's why that's where the flows are going, and that's the reason why India is getting a fair share of FII selling.
I lean towards the latter, that it's a relative U.S. versus India phenomenon. There really are very few corners of the world at the moment that are proving as attractive as the U.S., and those are actually usually tied in some way to the U.S. Economic story as markets see it. So Taiwan equity funds have been recording some good inflows recently, but that's very much tied to the assumption that the U.S. artificial intelligence story, DeepSeek notwithstanding, will continue to roar along. I would say too that even with recent outflows from certainly the dedicated mutual funds we track, it's still only a relatively modest fraction of the money that poured in over the previous 2 years. And I think there was always a likelihood that there was going to be a pause, a consolidation phase, given just how much money had come into India, chasing the Sensex higher. It's from my experience, there's always some degree of reversion to the mean, and India had almost 2 straight years of unbroken inflow, certainly into the dedicated funds. So this current period, while of course it's not what people in India would like to see, does not seem either excessive or unusual to me.
Cameron, with this, we'll let you go on that. Thank you so much for taking the time out and speaking with us and giving us a sense that where are we seeing the flows going.